All right, guys, Joe Saglimbeni here again on his YouTube channel, Joe Saglimbeni. And today we're going to get into my top 5 stock holdings that I own in my portfolio. All right, so let's get to it. All right, guys, so I'm going to go over 5 of my largest positions. That means my dollar value, my largest dollar value I have in these 5 stocks that I'm going to talk about. And before I get to the crux of the video, I just want to make a disclaimer here that I am not a certified financial planner. I don't even play one on YouTube. And make sure you do your own due diligence and make sure you reach out to a professional, either certified financial planner or financial expert, before you act on anything when it comes to the stock market or financial issues. All right, so with that being said, let's get to my screen. All right, guys, so we're on my screen and we're looking at Seeking Alpha, which I am a member of, and I wrote a couple of articles, and the 2 articles that I wrote are right over here. But I'm going to be using Seeking Alpha and another website called buyupside.com. And basically, I'm going to go over the 5 stocks. And I'm not going to go too crazy on numbers, just quick reason why I bought them, and whether or not I'm keeping them, and whether or not I'm selling them. All right, so the first stock we're going to look at is number 5, and it's going to be Nike. A lot of guys, of course, you guys got to know that Nike is the apparel leader, and the first thing we could see from Nike is this chart over a decade. And the one thing I always say when I invest in a company, I always look at the chart and whether or not it is going up consistently. Yeah, you have a couple things that happen, and that's normal. But basically, you got 534% in price performance over a decade. So we scroll down here. You see the company profile. Nike, together with its subsidiaries, design, develop, market, and sell athletic footwear, apparel, equipment, and accessories worldwide. Okay, so the thing about Nike is, one, the name brand. I mean, Nike's one of the biggest names in the world. And it helps that you also have Michael Jordan and the Air Jordans. That helps too. So I think Nike will be a core holding for a very long time. For me, I've owned this company for probably 4 or 5 years now. And if we look over here, down here, we'll see that the earnings per share estimates and the actual performances is a beat, a beat, a beat. Here's where it got wrecked by COVID, and then they just reported another beat for first quarter 2021. Also, if you look at the revenues, you'll see that basically the revenue rates are going up. And then you have some estimates for 2021 and 2022. And if you notice, 32 billion in 2016 to an estimate of 46 billion in 2022. And later on in the video, I'm going to show you some of the returns of these 5 companies compared to the S&P 500. All right, so let's go to my next stock, which is going to be Starbucks. So I'll put the symbol in here, SBUX. All right, and we have Starbucks. And you're going to see a profit Starbucks in the last year. 1 year return was only 9.74%. Okay, now we go to 5 year, 45%. We go to 10 year, 537%. So again, another good chart over a 10-year period. But this company struggles. When it struggles mightily. Okay, so Starbucks is the coffee company that has retail locations across the globe. So Starbucks Corporation, together with its subsidiaries, operates a roaster, marketer, and retailer of specialty coffees worldwide. Again, revenues 15, 16, 17, 18, 19, 2020 estimate looks like revenue is going to fall, and I'm assuming, and most likely that's COVID related, and then 2021, $28 billion. But if you notice, the revenues continue to go up, and that's another key with a lot of the stocks that I own, period. These larger stocks like Nike and Starbucks, their revenues are very big revenues that continue to go up year over year. Yes, you have issues, slowdowns, recessions, pandemics, but basically they go up. When there's weakness, this is when I would purchase more of these type of shares. All right, let's go to the estimates and see how they did here. So for first quarter, fiscal quarter 3, 2019, they beat. Right, the estimate was 73 cents. They beat. Fiscal quarter 4, 2019, they matched. Quarter 1, 2020, they beat. Quarter 2, 2020, they match. And then here is COVID-related issues. Okay? Quarter 3, 2020. All right, estimates 31 cents, 63 cents. So Starbucks is another company also that pays a dividend, and they raise their dividend every year. All right? Now we'll go to my next company, which would be the great Apple. All right? So Apple Inc. All right? This company, 1 year 89%, 5 years 286%, and 10 years a whopping 947% over a 10-year period price performance. Now, I've owned Apple for several years now, and everybody knows Apple. So again, another brand name, another great chart. Let's check out its revenues. Okay, so annually. So, not always the grower like Nike and Starbucks. Consistent revenues, but not overly a grower, not completely growing all the time. But the one thing about Apple is that it's massive revenues. $260 billion in revenues in 2019. Estimate of $273 billion in 2020 for the I guess year over year, and then September 2021, $300 billion. It's a large company, and let's check out its earnings per share. Well, beats all over the place. Okay, yes, pandemic, maybe COVID, maybe iPhone sales are slow. I don't know. I'm not going to get into it on this video. I'm just showing you that they continue to beat the estimates. And that's the point. These companies are beating estimates most of the time, and they have huge revenues, and most of the time they're growing revenues. Now, Apple's also a dividend payer, and they grow their dividend year over year. Okay, the reason I bring that up is a lot of times I look at companies that raise or grow their dividends, and this is another company that does that. I don't always buy stocks that pay dividends, and you're going to see that with the next stock that I have coming up right now, and that is number 2, my second largest holding, the great Amazon. So Amazon is, I mean, what can I tell you about Amazon? First of all, another great brand name, okay? A 1-year return of 81% for price performance, 5 years 434%, and in a decade 1794%. I mean, this company would have made you. I mean, I don't even know. You would have been a millionaire if you put a certain amount of money in. All right. So again, a great chart, a great brand name. Now let's check out its revenues. Scroll down here and look at this. 2015, 107 billion. 2016, 135 billion. 2017, 177.87 billion. 2018, 232 billion. And notice that's a pretty good jump. 2019, 280 billion. Estimate for 2020, 369 billion. 2021, 436 billion. This company is still growing, and it's a huge company. Well, again, just like the other 3 companies, Apple, Starbucks, and Nike, I'm long this company. I'm keeping this company. If there's weakness, I'm buying more of this company. All right, so that's basically what I'm doing. So again, before you even make, I just want to make a disclaimer here. Before you even pull the trigger on any of these companies, please reach out to a financial expert or certified financial planner and do your studying of this stuff. Okay? Because even though I'm telling you what I'm buying, that's my opinion. Make sure you make the right move for your own personal situation. All right? So let's get back to the earnings per share. So Amazon actually had, they actually didn't beat on some of the estimates. Back in quarter 2 2019, they didn't beat the estimate. Quarter 3 2019, they didn't beat the estimate. Quarter 4 2019, they blew away the estimate. I mean, look at that. Quarter 1 2020, they didn't beat the estimate. Quarter 2 2020, they did. So their estimates are all over the place. They don't quite beat the estimates all the time. But again, this company has always been about the revenues. Always been about the revenue. And let's face it, they're into so many things, from their AWS to their streaming service to their Fire Stick to their retail to their cloud. I mean, they're just an amazing company. Again, I'm long it. And now it's time for my last stock. And this is my largest holding. And it's also my longest holding that I have. Okay, so my number 1 pick is Mastercard. Mastercard Incorporated. All right, so let's go over Mastercard. First of all, first year, 1 year, 26%. 5 year, 230%. A decade, 1,258%. Mastercard is a credit card issuer similar to American Express, Visa, and Discover. Okay, and let's take a look at their revenues. So, December 2015, 9.6 billion. 10.78 billion. December 2016. December 2017, 12.5 billion. December 2018, 14.95 billion. 2019, 16.88 billion. Now, the estimate for 2020 ending December, 15.64 billion. This is where the pandemic is the issue for revenues, and then the estimate for 2021 goes back up 18.58 billion. This company also beat, 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 beat. It just continues to beat on estimates. All right, yes, they don't always grow their estimates, especially since the pandemic, but they beat. Again, this company is also a dividend. It pays a dividend and it grows its dividend. Okay, it's a small dividend, but it's growing its dividend, and I'm also long this company. I've owned them for over a decade, so a lot of what you see here with this 12%, 1200%, I captured that because I've owned it for over a decade. All right, so that's it. That's my top 5, guys, and I'm going to now go to a website. It's called buyupside.com that I use, and I'm going to try to do a quick tidbit about these companies and how they have beaten the S&P 500. All right, so now we're on buyupside.com. So this is a great website created by Richard A. Howard, and I go here many times to go check out some cool calculators and some stock charts and stock articles. So here I am on the page that has the calculator for, let me see, this calculator is for multi-year stock return calculator. I put Nike in, and I'm going to calculate the returns. All right, so now I'm just going to go, basically it'll go, 1 year, 2 year, 3 year, 4 year, 5 years, but I'm going to stick to the 5, 10, and 20 years. So take a look at this. 5 years annualized return of 15.99%, and this is for Nike. 10 years, 21.84% for Nike, and 20 years, 18.82 for Nike. All right. A little later in the video, I'm going to put a real quick. I'll show you the return of the S&P 500 over the 10-year period. But just remember this number: 21.84% 10-year period. All right. Let's put in Starbucks. I'm going to go over each of the 5 companies. We're going to calculate the return. 5 years, 9.77%. So you see Starbucks, the last 5 years, has not been the greatest stock annualized anyway. Okay, 10 years, 22%. 20 years, 15.8%. Just remember this: 10 years, that's 22%. Okay? And we'll go and we'll put in Apple. All right, so Apple. 5 years, 33%. 10 years, 28.62%. Remember that 10-year period. 20 years, 35.75%. All right, now let's put in Amazon. Amazon, 5 years, 38.63% annualized. 10 years, 34.51% annualized. 20 years, 27.54% annualized. And finally, Mastercard. All right, 20 years is not available because the company has not been public for 20 years. So look at 10 years, 30.64%, 5 years, 28.01%. All right, so guys, remember, I'm going to key on this 10-year period. We're going to look at the S&P versus these companies. Okay, and let's go to here. Compare returns for the S&P 500 and the stock. In this case, it's Nike. All right. Start date October 2010, and for Nike it's October 29, 2010, because it really only does monthly for the S&P 500, and that's why these. But basically, we get the gist of 10 years. All right, annualized return for the S&P 500, 9.73%. Meanwhile, Nike is 21.84%, and you could do this for every stock. If you want, you could put in Starbucks. All right. And you'll see that Starbucks did roughly a 22.3% 10-year annualized return, while the S&P does 9.73%. And real quick, I'll put the other three stocks in. We'll do Apple real quick, right? And you'll see that Apple did 28.62% 10-year run. And of course, the S&P was 9.73. We'll do Amazon. All right. We'll do that. And we look at Amazon, 34.51%, 9.73 for the S&P 500. And finally, Mastercard. All right. We'll put that in there. And we'll see what we get. And again, 30.64% to the S&P's 9.73%. So there you have it, guys. That's the 5 stock holdings, my largest holdings. And I realized that this video was a long video. But those are my 5 top holdings. And I wanted to throw in those returns just to show you that how they performed compared to the S&P 500. And listen, I've owned these 5 companies for a very long time, especially Mastercard. We're talking, these companies that I've owned over 5 years. All right, so again, they're great companies. I continue to be long on them, and I'll continue to buy them on dips. All right, guys, so that's it. I hope you enjoyed the video. I know it was a long one, and actually was very hard to do because I had to do several edits. But I hope you guys liked the video. Comment down below. Let me know your 5 top holdings. And always subscribe and share, guys. Let that algorithm work for me. And I will see you in the next great video soon. All right, so goodbye and have a great day.